What's going on, guys? How are you all doing? Good afternoon. How is everyone today? Right, so we're going to kick things off. Obviously, we've got Bitcoin. Tagged these lows. Right, had the sell-off. So moved into 100. Moved into 100 here. Deviated, sold off, right? So 13% sell-off in the space of 1, 2, 3, 4, 5 hours, right? So pretty decent flush here. Can someone just type in the chat? See if the chat box is working. Give me one sec. Maureen, what's going on? Right. So, yeah, 13% flush yesterday and did so in the space of 5 hours, right? So very clean, flush, classic bull market behavior on Bitcoin. As you can see here, even looking at the 4 hour, not much has happened, right? Not much has happened. We've, in terms of the bodies, candle bodies here, we're still holding cleanly, right? You can see we're holding mid, right? So RSI structure as well is intact. Basically all we've done, even though it feels like a huge move on BTC, all we've really done here is, yeah, reset to mid, essentially. So, now, what's going on, Eduardo? Stacked, smokes. So, yeah, anyway, this is the picture on BTC. We're all pretty familiar with it. Alt strength has been very apparent recently. So I think this session, it may be useful to go through the more general charts as well. So we'll run through Bitcoin dominance, ETH BTC, totals, etc. And Ethereum, of course. Let's start with BTC dominance. Right, so this is pretty key here, guys. BTC dominance, uptrend that lasted 112 weeks. Broken this trend line here, right? So this is critical, right? This is critical. In my opinion, this is the topping out of Bitcoin dominance, right? Clean trend line to work with. Lost the 50 level here as well. Okay. Great sign for altcoins, right? As we all know, BTC dominance tops out. Altcoins then get their proper time to shine. You can also see we have confluence here with a weekly cluster of supply, right? So bang into supply, broken the trend line that had, 1, 2, 3, 4, 5 touch points. And yeah, this is a pretty aggressive move on dominance we're seeing here as well. So great sign for the alts. As you can see recently, we've had huge alt strength despite, in the face of the BTC nuke, we've had massive alt strength. If you go over to the, and also just to revisit the delta side of things as well. what it took to make the nuke happen on BTC was the most enormous candle of positive delta I've probably seen in my trading career, right? So second to this, you know, huge spike here. This is an enormous candle in itself, right? In its own right, this is an enormous candle of positive delta. This one's, I think, over twice the size, right? So an enormous amount of market buying occurring into limit asks, suppressing price. This flush was natural after seeing this delta, right? We also have some liquidations to support that. Come down now, tag this low, and whilst doing so, produced some flip side pro trend delta this time. Very good liquidations, okay? So for those that aren't familiar with aggregated delta and the delta concept in itself, we treat pro trend delta with much more credence than we do counter trend, right? So goes without saying, we're in an uptrend, so we're looking for negative delta, right? Not positive delta. And we tend to treat pro trend delta, depending on the context and strength of the trend, by a factor of 2 to 3 times over counter trend delta, right? So if you picture this candle here as 2 to 3 times larger than it is, then that's a much more accurate picture of what you're seeing. And essentially, yeah, we tend to ignore counter trend delta in aggressively trending conditions. So in uptrends, we're tending to ignore positive delta. And in downtrends, in bear markets, we're tending to ignore negative delta, right? But this being such an outsized candle, we couldn't really ignore it, right? And you can see the play out here. Clean flush, obviously wiped out a lot of leverage as well. Tons of liquidations being racked up. And yeah, as I said, looking at Bitcoin, we're still retaining structure, right? We're still retaining structure. It's been a clean takeout of the most obvious target, and we're probably going to resume for more upside from here. You can see that in the buyback in itself, right? So dominance, very good. Very, very good for our alt positions, our spot bags, and for the opportune times to come ahead in terms of trading alts, right? This is going to add much more fuel to the fire, make the market even more directional, right? So we're still in long-only mode, even with this signal here, right? So, you know, when I'm seeing these intense counter trade signals, right, counter trend signals, I'm not taking a short position, right? I'm staying away from the red button. All of my energy is focused on longs and looking for playing with the trend, essentially, right? All this did was make me flatten up my positions that I was up massively on, realize profits, and move on, basically, right? I'm not taking counter trend trades at any point. You'll hear some traders go, oh yeah, okay, cool, well, you're a trader, you should trade both ways. Why? You know, there's no reason for me to do so. The probability of those trades playing out are much slimmer. And then the play out as well is going to be much weaker, right? So we focus all our efforts on, you know, as I said to you guys many times before, we take the top tier setups. In this case, the top tier setups are very much within the trend. It's as simple as that, right? So BTC dominance looking great. We can move over to ETH BTC as well, right? Particularly interesting at the moment on the 3-day. You can see the AO giving us clean signs here. Teetering up whilst price makes lows from August, okay? So we have a running 3-day divergence on ETH BTC. And typically, when we have these divergences that are running higher time frame divergences, we don't tend to see them on the RSI, right? So they only really present themselves on the AO, which is it's a slower oscillator, more accurate but slower, right? So it's not going to give you those precise entries. But its signals are on the higher time frame, not ones to be faded. Okay, and obviously, you know, we don't just treat this chart in isolation. You can see that there's a divergence here as well. A small div here as well. But then when you both combine this with BTC dominance and then look at the structure of this, right, a much more powerful running 3-day divergence, the picture starts to add up, right? So when I talk about the awesome oscillator being a great tool for higher time frame reversals, those in my group will be familiar with this example here, right? So when everyone was doom calling, you know, everyone hyper obsessed with macroeconomics, everyone became macroeconomic professors, right? I was just listening to the oscillators. So the AO here, clean uptick, lower lows on price, right? Higher lows on the AO. And you can see we didn't really get much of a picture here on the RSI. It's much choppier, okay? Not as clean, but the weekly AO signal here was not one to fade, and you can see the play out as clearly as it comes, right? So again, just a note, you know, when the AO tells you things on the higher time frames, it's usually right. So ETH BTC in combination with Bitcoin dominance, looking very good for the alt market. Totals, haven't looked at these in a long time. So yeah, this was these were some patterns that I drew up many months ago, I think more towards the beginning of the year as we were coming out of this blue consolidation box here. But you can see the cyclical patterns repeating themselves, right? So we've got red, price coming down, accumulation, consolidation, ascent, and then it repeats itself basically, okay? So everything is very much on course for totals. Yes, you can see that we are not playing it textbook, but as you know, these things don't repeat themselves. They don't print the exact same patterns, okay? So as you can see here, the last pattern was something like this, okay? Here we've got a different structure, right? We've already had this sort of correction consolidation here. So it's anyone's guess what happens from here, basically. Anyone's guess. But total's very much still on course, right? Looking very healthy. So ETH BTC, Bitcoin dominance and totals looking great. Obviously with BTC stretching above 100K. And the alt market in itself looking incredibly strong, right? Incredibly strong. So, you know, when Bitcoin corrects and we see alts holding up as they have, that's typically the first sign we want to see for a proper alt run, right? So essentially what we've seen so far is nothing compared to what will come if those signals are correct and my understanding of it is correct, right? So been here for 3 cycles. The last 2, that was very much the case, right? Bitcoin nuking, alts holding up, and that basically being the signal of the infinite bid, right? The signal of the strength in the alt market, the market's intention. And as always, guys, we don't listen to narratives, right? We listen to the charts, and the charts are telling us a very, very clear picture at the moment. What's up, Kim? VDC. Smokes. So now BTC dominance is broken. Would you say that if you had 0 spot bags, now you could buy spot and feel comfortable doing so? 100%. Yeah. I don't think this is too late at all. Right. If you're looking at the weekly. And this notion of like being too late, right? I've had a lot of normie friends get in touch with me and ask me if they're too late. First off, I hate giving advice to my normie friends because it always, rarely works out well. I'm sure you guys are familiar with that as well. But there's no such thing as too late, right? There's going to be fresh launches that occur, pretty much every day in the market. So if you feel like you don't want to enter into something that looks like this, that's fine. Just stalk new launches, right? And you can enter in here instead. So yes, to answer your question, Bitcoin dominance has given us ample signals, right? Alongside ETH BTC, the Bitcoin nuke and alts holding up, totals, everything is aligned in harmony at the moment for the alt run. So in terms of are you too late? Absolutely not. Absolutely not. How many bars in the AO at the weekly time frame do you use to validate a divergence? I don't really treat it in terms of bars. I'm more just looking for the structure, right? I'm just looking for the structure. I'm looking for the AO to tell us clues about momentum. So here, for instance, peaking up, peaking down, and that's all I need to know, right? I don't need the signals of how many bars to lock in the divergence. It's just the general picture I'm using. Right, so that's the general picture of the market. I want to run through a couple of charts with you guys. So I just want to remind you guys of the scanning process, right? So this is what I do every morning. We've gone through this in previous streams, but I want to run through it again quickly so you guys can remind yourself and just see, how I go about doing things. So I've got 3 of these charts, right? Super alt charts. We can take this watch list here as well, okay? So essentially, take the top, say 5, right? Or 4, XRD, USDT, and Uni, right? XRD and Uni. Okay. Then we've got WLD, Jasmy. We can take one more, VRA. Okay. So that's the first super alt chart done. Then I go to the next. The reason I split them up is just because if you have hundreds and hundreds of markets on the same overlay, then it gets very confusing. So it just gives you a bit more clarity. What have we got here? SCR. DYDX. ZKF. CRV. And these are the clear outliers at the moment on number 2. Then on to our third. Supra. Absolute scorcher today. Fresh Bybit listing. And the reason these overlays are helpful is because to do a full scan, it takes hours, right? To do a full scan across all timeframes. To to do this is much quicker, right? So you can immediately see the strength in the market, and as you know, we need to focus on strength as much as possible, right? Don't be afraid to long something because it's up. We're looking for strength, and we're looking to play into that strength. ZRC. We can take this one as well. Morpho. Go Morpho spot. So then from here, we have them all, right? So I'm looking primarily at the hourly. Okay, so we go to XRD. And we're just going to flick through and see if there's any valid setups, okay? So typically what I want to be doing is marking setups to the upside and the downside, right? Just in cases. Likely we won't get those to the downside, but this, for instance, is a nice low, right? If for whatever reason we get the takeout there, this could give us a clean trade, right? So acknowledge strength, right? Look for opportunity. At the moment here, there's no clear opportunity for me in terms of plays to the upside. There's no horizontal breakout levels, diagonal breakout levels to work with. So we simply mark out the low, right? Looking for the downside play. Uni. And again, guys, I'm sticking to the hourly time frame. I don't go below the hourly, okay? Reason being is because there's hundreds of markets to scan through. There's tons of opportunity in the markets. I don't need to fuck around with the 5-minute chart, right? I'm looking for setups that still have validity to them. And the lower time frame you go, you lose validity, right? So I don't need to be playing into, you know, real higher time frame charts at the moment because momentum is on our side. But the 1 hour is a very nice balance between capitalizing on opportunity, getting nice playouts, and you know, while still retaining validity. So again, uni, I'm not going to mark anything here. The low's already been taken, right? So this is likely not going to happen. Nothing to the upside either. Right, so we don't just simply long markets because they're up and they're strong. We still need that technical trigger to enter. If you don't get a technical trigger or feel like you're forcing your own narrative onto the charts, then simply skip and move on, because there's so many markets, there's so much opportunity. Wait for the nice setups, right? Look for the strength, but be patient. So again, we can mark this low here, just in case it gets tagged. Nothing to the upside. I'm happy to mark this here, just in case. And to the upside, we could work with this diagonal level here, in fact. Okay. So in this case, I'd be setting an alert on the trend line. I'd probably just be monitoring this live as well, okay? Yeah, in case something like that happens, okay? So this just gets marked, and we keep eyes on it throughout the day. SCR. DYDX, you can see I've already done this morning, right? So happy to go down to the 30-minute, nothing under, okay? So you got an alert here at the top of this demand zone. And again, we just assess price as it comes into this level. Back to the hourly. CRV. Put a tweet out on this earlier. Clean break, right? So these setups are exactly what we're looking for, and I found this during this morning's scan. RSI hovering around mid here. 1, 2, 3, 4 touch points, right? And a textbook symmetrical triangle, right? So 4 to the upside, 3 to the downside, and this couldn't look cleaner, right? So, you know, strength into here, textbook symmetrical triangle, RSI giving us everything we need to enter the position. So I'm long from here, okay? And yeah, these are the trades we're looking for. Strength, keeping it simple, looking for an explosive breakout, right? Just a quick tip to you guys. You can see that I didn't have the long position on my charts. That's actually not to conceal it from you guys. It's more for myself, right? So when I enter positions, I log it all up, journal it all up, but then remove the long position. I don't like seeing my positions, right? I'm not someone who deals particularly well with trades being underwater. I prefer to hide the long position. Just helps with my psychology and the management of the position. Otherwise, I may see it underwater, check the P&L and start getting more emotional about the trade. Found this is something that's always been incredibly useful to me in my trading and very much recommend it. So still on the hourly here, Supra, nothing to work with, just a great example of focusing on fresh listings. So the last stream I did privately for my group was basically just talking about focusing on fresh buy bit listings. And you can see here, horizontal break, right? Clean full-bodied breakout candle here, mega run, right? Didn't catch it myself, but a good example. 60% on the day. ZRC, right? Another fresh buy bit listing. I was playing around with this earlier. You could sort of do this, right? Some sort of horizontal level here. Not ideal, because ideally we want this to be in isolation from any left side price action like this. But that being said, we have to also acknowledge that we do have a good amount of touch points here. 1, 2, at least 3. And that it's a fresh buy bit listing as well, right? So we can mark this up and keep a close eye here. Maybe even set an alert up here. Look for the break. Morpho. Right, nothing to work with here. To the upside or the downside. Right, this is just a climb up. And nothing we can do in terms of marking out targets there. Just gonna check the chat. FET looks good. I imagine it does. My AI bags are doing very nicely at the moment. CRV, textbook setup, you risk more like 3 to 5% instead of 1 to 3%, for example. If you like. I'm just sizing up more and more as I clean up my trades. So I went flat on positions over the last couple of days, or yesterday I went flat. Realized a ton of capital, and now I've just increased my size, right? So I'm just doing it periodically. In terms of like weighting into particular setups, that's completely up to you. Typically speaking, despite this being as textbook as it comes in terms of a pennant or symmetrical triangle, I would size up personally the most. Well, look, I've sized up a lot into this position, but that's based on personal account growth, right? In terms of being more objective with sizing up, I'm typically looking for horizontal breakouts, right? So typically looking for horizontal breakouts over diagonal breakouts. And although we have a very clean textbook symmetrical triangle, that's still working with a diagonal, right? And even you can just put another touch point in here, right? So consolidation underneath. And these are the trades that I would objectively size in the heaviest into, because horizontal levels are objective. Diagonals are a bit more flimsy, right? They're a bit weaker. They're a bit more subjective. And that's why they're commonly referred to as meme lines. So we can go through some textbook setups that I've plucked out from today, right? Some of the markets that I've been looking at. You can see this watch list is called 1 to 4 hour setups. Reason being is because the conditions are changing, right? The conditions are changing. So you can see that in Bitcoin dominance. You can see that in ETH BTC. You can see that in alt strength yesterday as BTC nuked. As a result, my scanning approach is changing. The reason being is because the market is getting stronger, right? So the market's getting stronger, which means that I need less validity in my scanning process. What I mean by that is previously I was taking daily breaks, right? So stuff like this, taking daily breaks. And the reason being is because these setups rarely fail, right? When you have the bear market coming to a close, this accumulation period here, and then clean breaks on the daily, these setups have incredibly high validity and subsequently very high probability of playing out. The drawdown of playing into daily zones and daily setups is the play out time, right? So as you can see here, it's obviously taken a good bit of time from this initial breakout here, 13 bars, right, to get up to 30%. Whereas if you look at something like SCR, one of my recent trades, you can take zones like this, right, intra-demand here, and these can give huge playouts, right, and give you very tight entries, allow you to size into the trades responsibly. So for instance, taking the top of the zone here, stop a bit the other side of the zone here to cater for a sweep of the lows, just cater for a shallow sweep in case this demand gets run through just by a bit. We're not going to do anything silly and put our stop here, but just a few pips, right? And you can see that at this point here, we're at a 6.2 R. Whereas if we're taking the daily with Badger, just clean this up. Let's say we're taking it here, stop the other side of consolidation here. It's a 1.2 R with responsible stop placement, okay? If you want to, tighten it up a bit here, stop here, entry here, and then we're still looking at 1.9 versus a plus 6R trade, right? So that's my logic and rationale for focusing on the hourly to 4 hour, right? So this is mainly what I'm scanning for these days, right? I'm out of all my daily swing position trades. I'm simply looking to focus on the hourly, the 4 hour, which is for me the best balance to maximize on value and opportunity, maximize on account growth through these conditions, whilst retaining validity, right? So as I said earlier, I'm not looking to scroll down to the 5-minute time frame. The 1 hour and the 4 hour is great, right? You can get very high R trades. And despite me closing SRC, right, due to personal reasons, the account being up very nicely, looking to lock in the profits, compound those gains and recycle and continue. These can easily look like this, right? These can easily look like this and further, right? So you can take these much further and you have huge R trades. You've got in at very tight stop placement. You've taken responsible stop placement as well. But these are the setups that I'm focusing on, right? These are the setups I'm focusing on, and looking for the daily is just way too much opportunity cost, right? Because you have to lock up that capital, lock up that margin, and if you're trading responsibly in these markets, then you have a set amount of open risk, meaning you could only have a certain amount of open risk at any given time on the long side. And why would I have that risk assigned to daily setups that are going to take much longer to play out when I can still hit bigger R trades on the hourly, and the market is in conditions where it's valid enough to do so, right? So that's my take and my approach at the moment. So if we scan through some of these, comp looking nice, right? A good example of using the midpoint on the RSI. You can see it's just hugging the mid here, right? So come down, it's testing the mid and using it sort of as a support level as we move up. So again, I've got an alert set down here. Whether we get it or not, probably not, very unlikely. But we have to go through this process anyway, right? So we can see recently on ETH, you know, down here, didn't take the lows, no trigger for the SFP traders. Up here, did, right? So well worth having an alert. Treat this as an altcoin. Imagine this is an altcoin. It's worth having that alert, right? Again, here, worth having that alert, right? So we're focusing on the strong markets. We keep those alerts in place, right? I'm not gonna, at the moment, what I'm not gonna do, if we just go back to comp, what I'm not gonna do is ape based simply off the 50 level being retested and used as support. I'm not gonna use this as an isolated trigger at the moment, right? So at the moment, the alt strength and the alt market, the current market conditions are great, right? They're incredible. But they're, you know, for me to drop my stringency to enter a trade just down to it, you know, retesting mid and holding it, the conditions have to be parabolic, essentially, right? The market has to be completely frothing over. And at that point, I may just lower my stringency down to take this. To put it in context, those that have followed me for some time, members of my group, know that, you know, in range-bound conditions, we're not just looking for a sweep, right? We're looking for a divergence as it sweeps. We're looking for delta as it sweeps. We're looking for speed into that sweep. We're looking for much more confluence to occur. And at the moment, I've dropped it down to just getting the sweep. So again, it's just one isolated trigger. But that's low enough for me at the moment, right? I'm not going to start dropping my stringency even further down unless the market gets into insanity, basically. So run through Merlin. So I've got this level here. I believe I've got an alert here. So that's 30-minute. As I said, happy to go down to the 30-minute, right? So we've got a potential breakout level here on the 30. Ideally, what we want to see is some space, right? Some space between this touch point here and the next, which is already fine. Even if we move up from here, that's still enough space. Consolidation, break, enter, okay? As I've run through many times before, stop placement, it's simple. It's at the base of the consolidation that led to the breakout. Entry is 100% installment. We're not building positions. And again, what I haven't done here, which you can do, is set an alert at the low as well. So those that have been following my trades and my analysis, ENA, ENS, and these are examples of basically just being 10 steps ahead of the market, right? So down here, entry, knowing that we have a valid horizontal breakout level to work with on the hourly, okay? So 1, 2, 3, 4, 5 touch points, despite some of them being wicks, okay? Taking out double lows, right? So yes, we're mainly looking to play into strength, and what that means is we're taking plays to the upside, triggers to the upside, but we can also take triggers to the downside if we know that it's going to domino effect into a trade to the upside. So as you can see here, basically what this did is gave us a clean early entry into the breakout, right? Clean early entry, positioned very nicely, comfortably into a larger breakout to occur, right? So when you see plays like this in the market, these are some of the nicest and tightest plays you can get with very, very high confidence, knowing that basically you've secured yourself an early seat to the breakout trade. Same with ENS, okay? Double lows taken out. This one hasn't played as nicely, right? It's not to say that it won't, okay? So even still, take these stabs, right? Take these stabs, because let's say you put, half risk on ENS, half risk on ENA, you'd be still just about above entry on ENS, and ENA you'd be ripping, right? So great trades to be looking for. Just a note to be 2 steps ahead of the market, right? Start thinking about these things. These setups were plucked out of my 1 to 4 hour setups, right? So I knew that the horizontal breakout levels were overhead, which gave me a lot more confidence to take a downside trigger. So yeah, Merlin 30-minute. Billy, hourly, looking at the diagonal here. CRV we've spoken about. Data, 1, 2, 3, 4 touch points, right? Alert set to the downside. Same principle as ENA, ENS, but using a diagonal. FLM, this only just made the watch list, right? Reason being is because there isn't that much space in between the touch points, which is typically not what we want to see, right? We want to see something like this, nice gaps between each touch point. Otherwise they just merge into one and it gets a bit more messy. Okay, so again, alerts here, alerts to the lows, right? Alerts to the upside, alerts to the downside. H-bar, alerts here into demand. Yes, we've taken out this low, but it's a shallow sweep. Not enough confluence for me to enter here, despite the strength of the market. I'm looking for really a move into this demand zone here. And if we don't get it, we don't get it. That's fine. We move on. Alluvium. Again, diagonal. 1, 2, 3. Mask. Cleaner on the hourly. Again, would prefer to see a bit more of a gap here, so I'd constitute this really as 1 tap, 2 taps, 3 taps. Tier, nice level, more gappy, right? It's more space between them. Again, alerts, alerts on the level, alerts to the underside as well. Blur. I'll probably set one here. Grass, this is a 4 hour. All right, so we've got 2 touch points here. So we really want to see another. Okay, something like that. Cheeto, 4 hour. So we've got some nice equal lows here for our downside alert. Mavia. Taking out this low here with speed, but again, it's one of the weaker markets, right? So this is a sign of weakness in itself. So yeah, we have to be cautious with these and see a bit more of a push away to confirm this sweep. Pepe, 4 hour. Okay. I mean, we can do this. Odds are slim, but again, why does it hurt having an alert? Badger, we just ran through. Yeah, that's pretty much it. Okay, so that's the 1 to 4 hour setups of the day, essentially. All right. Do you take breakout or like a 1 hour close or retest? Breakout candle. So we just take the hourly breakout candle, 4 hour breakout candle, whatever time frame we're marking up our breakout level on. We just take that candle close, full installment. Stop set responsibly, usually the other side of consolidation. Simple, super simple stuff. Orca and ACX getting listed on Binance in 30 minutes. Any opportunity there? No idea. You and CBS AO gameplay goated. Appreciate that. ADA with a similar structure to Badger. Yeah. When the resistance is a diagonal pointing down and the support is a straight line, it's usually seen as bearish, but since we're in an uptrend, should it be considered bullish? Yeah, for sure. For sure. Again, we just need to reframe the way we're looking at the markets, right? So we're just simply looking for strength, right? So a diagonal, doesn't matter that it's pointing down. Right, look at CRV for instance. Textbook trades. It's as simple as it comes, trading these conditions. So anyway, that's pretty much it for today, guys. Yeah, I just wanted to cover off the process, look at some markets with you guys. Just want to put a word across as well that there is tons of opportunity in the market at the moment. Spend a couple of hours every morning at least scanning through the markets. You'll be hugely rewarded for doing so, right? So this is very much a case of effort input equals financial output. Play things very simply. Look at strength. Do full scans as well. I just did the quick one for you guys, right? But to put this watch list together, I had to do this as well, right? So basically just run through all of them on the hourly, spend a few seconds on each, like so. Look for strong setups, set alerts. So you can see here, I've got an alert here, right? Then do the same for, run through the full watch list here. It's a few hundred. And do the same on the 4 hour. Look for those horizontal breakout levels, those diagonal breakout levels as well. And just spend time just absorbing information, scanning for setups and looking for value, right? There's so much there at the moment and it could even get more intense, more value, more opportunity. Start seeing things just trade like this, CRV style, textbook setups. Simple stuff, guys, right? Just don't overcomplicate it. Single installments, responsible stock placement, and yeah, go get it. All right. Anyway, guys, I hope you have a lovely weekend. Nice to catch up with you all.